Hi, I'm Jesse, and I want to give you an overview of this tool that I've been working on. The point of the tool is to help you do investing in a better way. So the reason I built this was because previously I just kept my money in a Vanguard account to track the S&P 500, and it performed pretty okay, but I got curious if I could do better. And what I decided to do was try picking individual stocks myself, tag each of the picks with a strategy because I tried a bunch of different strategy and I tried a bunch of different strategies. I bought a bunch of different stocks according to each strategy and see how they performed over time. That was the idea. And I built this tool to facilitate that process. And just to kind of preface things, here's kind of proof that it's been working for me pretty well. You can see I'm up 30% for 2020 compared to the S&P 500, which is down like about 6%. So none of what I'm about to tell you constitutes financial advice. I'm not a finance professional. I'm a software engineer, and I've been learning this finance stuff a little bit, but nothing that I'm going to show you in this video should be considered financial advice. This is a tool to help you think through your investing decisions on your own. That said, here's a little more detail about how the tool works. So the first thing you see at the top here is basically all of the trades I made. It's just a CSV file that you can import. Here you can see what the CSV file contains. As you can see, it's like I described, where I have these are the symbols I bought. I blacked out most of them because like some of these, Motley Fool is a stock picking service that you have to pay for, so I shouldn't divulge all their picks. But anyway, yeah, you have the symbol, you have the strategy. Sometimes I've added a sub strategy as well. And this is the date I bought it. This is the date I sold it. Okay. So coming back here, that's what this is. It's just the price of one share of each of the companies. This one isn't. This graph at the top isn't that interesting. This one is the far more interesting one, which is the return on investment for each of the transactions I made. Like you can see here, this is Zoom, and it's kind of a crazy outlier that's up, 1.5 return. So that's 2 point. I basically multiplied my money by 2.5. So yeah, that's kind of an insane return, right? I kind of got lucky there because of the COVID situation, where everybody's working from home now, and that's been one of the drivers behind this explosive growth. But I also had a few other winners here, right? But just looking, and you can see here, like I tried a whole bunch of different strategies and bought a whole bunch of different stocks here, but then I just kind of decided to move on and sell everything and just stick with some simple strategies going forward. And then I worked on other stuff that wasn't related to investing, but now I just started coming back to it. And this kind of tells that story. But right, so the point of this is individual stock performance isn't that interesting. What we really want to know is how did the strategies perform, right? And that's what this is, where like I said, I tagged each of these with a strategy, and then some of them had sub strategies as well, and then I combined strategy plus sub strategy basically. Some of these just ended with an underscore because there was no sub strategy, and it just tracks each of them. So like this one that's doing the best, you can see is just Motley without any sub strategy. And this one that's not doing so well is S&P 500, where I did just buy an S&P 500 index to have something to compare it to. And you can see this one worked pretty well too. This is, I called Motley Mix, where I basically intersected the Motley Fool recommendations with recommendations from another advising service, and I just bought the stocks that they both agreed on, basically. So yeah, that's kind of the main point of the tool, right? I can show you some other stuff. This benchmarked version, which is I talked to a friend about what I was building, and he kind of pointed out that while I had been using the S&P 500 before, there's an alternative index called VGT that he likes, which is outperformed the S&P 500 index by quite a bit. And so, yeah, this is a collection of tech stocks. That's what VGT is. It's a Vanguard tech index. And so then I was thinking, okay, how am I doing compared to VGT, right? And so I have this thing where I can change my benchmark from S&P 500 to VGT. So in case you don't know, benchmarking is where you subtract the alternative investment or the default investment you could have made. So because if you're going to be picking individual stocks, you need to be doing better than the S&P 500 by a significant margin to justify, taking the additional risk, uh, doing the additional effort. And so that's what benchmarking is. You take the price of the stock at every day and you subtract you take the daily return on investment for the stock, and you subtract out the daily return on investment that you would have gotten if you had purchased the S&P 500 or whatever benchmark you're using. And so the baseline is the perform. So the baseline is basically the performance of the benchmark, and so anything below the baseline is underperformed the benchmark. Like you can see, VOO, which is the Vanguard S&P 500 index, underperformed VGT, which is this zero line, and most of the other stuff that I went with still outperformed the VGT, except for a couple here. So yeah, that's kind of what this benchmarking feature is all about. And then this is I also have a version of the strategy graph, which is benchmarked as well. And you can see Motley Fool has still been beating BGT, or at least a subset of Motley Fool recommendations that I ended up actually buying. When you look at this thing, one thing that I immediately started thinking about was, what if, so here you can see the line ends because I sold, but what if I hadn't sold, right? And so I created another version of the CSV file where you can see the sell dates are in this column, but what if I had never sold? So I just marked them all as and not applicable, meaning still holding, never sold. So then I can switch over to this CSV file, which is just this one here with never selling anything. And let's see how that would have done. This graph isn't reflecting reality because obviously I did sell stuff. But yeah, here's the stock prices. Here's this spaghetti is all of the stocks from the time of purchase to now, assuming I had never sold. But what we really want to see is the strategies, right? Especially the benchmark strategies. So here you can see, if I had held on to these, there are a lot more losers here. So it's kind of a good thing I had sold them earlier when they were underperforming and kind of focused on what was working, because that stuff is more in this area. You can see that one thing that I kind of missed out on was there's a subset. Motley Fool it's run by two brothers, and they each have different teams that produce different sets of recommendations. And I tried just buying one of the brothers' recommendations versus the other one. And normally it's interesting because one brother normally does better than the other by quite a significant amount. But recently, the other brother's been doing better, within the time period that I've been looking at. And so if I just focused on his picks, that would have been the best strategy of all, which is interesting. I think he's more into growth companies, which tend to do better towards the end of a business cycle. And maybe that means we're towards the end of a business cycle and everything's about to crash. I don't know. But there's that. And then there's this other interesting one called Teckle, which is basically a leveraged version of a tech index. And we could talk about what that means. But okay, so yeah, let's talk about that. I got interested in, so ETFs are the S&P 500 index or VGT. These are both ETFs, which are just collections of stocks that you can purchase the entire bundle rather than picking individual companies. So I just downloaded a list of ETFs, and I said, okay, let's look at the top 10 best performing ETFs of all time. And once it loads, yeah. And this one is kind of weird data. I think it's an old company or something, but I can just click this purple line here to get rid of the weird one. And these are the best performing ones. And we can double click this to hide everything except Teckle, which is the leverage ETF. And you can see that the way it works is basically, it's kind of too complicated to explain, but every day they rebuy the overall index with 3x leverage, and basically because of technical reasons it doesn't handle volatility well. So that's why when most of the market came back, this one hasn't come back at all. But it's also why these returns have been so insane. If you look at this y-axis, then you can see it's at 250, somewhere close to 250 right now, and there was what is this, $3 around early 2010. So what is that, almost 100x. So yeah, that's the power of leverage. Whether you want to buy a leverage ETF like this, it's kind of crazy. But if you want to look at what's the best ETF of all time, I got curious. This is it. Most of them, I should definitely point out that the vast majority of leverage ETFs don't do this well, and especially because of this volatility thing. But yeah, that's I'll just kind of throw this up as just a not that boil stock. Just a quick caution about what normally happens with these things. And yeah, they go like that. And maybe that's what tech will do in the future. I don't know. But anyway, yeah. So the point here is it can also handle text files, which is so this is just a list of symbols where like I literally just downloaded a list of every ETF in existence from somewhere, and I threw it into the tool and just to see what happens. And you can see this one is weird, and it shows up, and that one is weird, so I'll get rid of that one. But yeah, you can get like all kinds of interesting analysis here. And yeah, I think that about covers it. I actually, like you can see, I analyzed Tom's performance versus David's of all time, and then recently. But yeah, again, those are proprietary. That's proprietary data, so I won't share it. Yeah, I mean, I think I gave you an overview of the tool. I think you have an idea of what I'm thinking behind it and why it's been working out for me so far. We'll see if it continues working in the future. But I mean, one of the advantages of the tool is if a strategy stops performing, then I can switch to something else. I can put most of my money into the dominant strategy that's working the best, and maybe put a little bit of money to a bunch of different feelers to test out different strategies, and just kind of stick with what works over time. That's the plan. So yeah, hopefully you're interested in the tool and should be ready soon. All right, thanks for watching.